and local trade expected to continue its downward trajectory from last session's declines. The JSE sliding on Friday to the lowest level since mid-December, in line with global markets. Portfolio manager at Rand Swiss is Gary Booysen, joining us now to dissect some of the latest market moves. Gary, good morning to you. Your quick overview of how local trade is faring this morning. Are the markets at all concerned about this national shutdown?
It's difficult to tell if the local markets are looking at the national shutdown or if we're looking at negative sentiment globally. So we've obviously got the big news story internationally around Credit Suisse and UBS, and that sent the offshore markets firmly lower. So we have the Hang Seng index in China down over 3%. We've got the Sensex in India down 1.3%. So it is a very negative day on the market overall. We have seen our currency starting to slide again. So we're down to 1840, kind of where we closed on Friday. So not big moves coming from the local currency. So maybe discounting the national shutdown to some extent and just really focusing on the pessimism globally. And that sent every sector lower. So you can see that the sector that's fallen the most is the financial index, the financial 15. That's down 1.5% currently. And just as this global banking crisis continues to simmer, I think that's where the fear really is being felt. Industrial index down over 1%. Top 40 index down 0.7%, and the resource index bucking the trend up at least up 0.75%, and that's all the heavy lifting being done by the gold miners. So you've got the likes of Anglo Gold up almost 7%, Goldfields up 6.5%, Sibanye-Stillwater up 3.5%. So all that kind of safe haven play into the gold miners, still feeding through from last week as people look for shelter in the storm.
Yeah. Gary, I'm not going to let you go just yet around this national protest. Ratings agencies recently flagging what they're saying are unrests that are going to be experienced in South Africa, induced by the lack of electricity, the economic growth that is not performing as it should, and basically overall joblessness. Would you say that today's events, or those warnings by ratings agencies, what we are seeing today, this national shutdown, is perhaps what these rating agencies have been pointing to?
Of course, but the national shutdown for me, it's a symptom of a much wider problem. It's not the root cause. I mean, South Africa has incredible systemic issues. The people are being left behind in South Africa, and the result of that is the likes of the civil unrest that we saw, or protests like we're seeing today. So certainly, I think it's firmly in the ratings agencies' minds. S&P Global Ratings downgraded our outlook. So I mean, that went from positive to negative. Remember, the outlook really gives us an indication of where that rating is going to move in future, and it was on a positive footing, thinking that we might start clawing back a couple of notches back towards investment grade. But given the widespread load shedding and the level of load shedding that we felt in 2023, stepping that back to a stable outlook. So I'm saying they're not going to cut us further into junk, but saying that we're not seeing the improvement that is required for us to try and take the very difficult steps back to regaining an investment grade credit rating.
Yeah. Let's talk commodities. Oil prices continue to slide on recession fears, while gold losses ground on rising sentiment after exactly what you pointed to earlier, and that is the Credit Suisse rescue.
So gold prices, early this morning we did see, a slight dip off in gold prices. And I think it was that announcement around UBS buying our Credit Suisse that might have just buoyed a little bit of optimism, but that is reversed now. So we're just a touch away now from $2,000 an ounce on the gold price. So currently sitting at $1,988. So we've got $12 to go before we see that $2,000 handle once again. And this again, as I said, we're seeing it in the gold miners, we're seeing it in the underlying spot metal price as well. And it's really when you have a banking crisis, when you have people that are afraid of what's going to happen in the financial system, you see moves towards things like crypto assets or gold assets that operate as a different form of money. So gold price is actually reversing those earlier gains, earlier losses, and now back to gains. Oil still firmly under pressure. So we've got the Brent crude oil price down at $71 a barrel at the moment. That down significantly after heavy losses last week, and that's just really on fears of what a contagion effect might look like, and what this will mean for real underlying economic growth. If we see problems in the financial sector that are equivalent to something like we saw in 2008.
Yeah, let's drill deeper, Gary, on this Credit Suisse issue. For those who don't know, this is Switzerland's biggest bank. It's called UBS. It's agreed to buy this ailing rival, Credit Suisse, in an emergency rescue deal. Now, there are talks of further job cuts at Credit Suisse. What exactly is going on?
So last week, the SNB, so the Swiss National Bank, which is the central bank, it's like the Reserve Bank of Switzerland, stepped in with, essentially emergency liquidity provisions, trying to, just essentially stem the panic that we saw in Credit Suisse's share price and among depositors and clients of the bank. It didn't really do enough. So after a weekend of negotiations, UBS, which, as you say, is the largest bank in Switzerland, is going to buy out Credit Suisse, the second largest bank in Switzerland, which is pretty historic. When you combine the two banks, it's going to be one of the largest banks in Europe. UBS has $1.1 trillion worth of assets. Credit Suisse has around $500 billion worth of assets. It's going to be an absolute juggernaut. The problem is the way that the deal is structured. So UBS is going to essentially swap shares for I think you're going to get 22 credit, you get one UBS share for every 22 Credit Suisse shares. So it's a share deal, but it's worth about 3.2 billion in the equity. But that's not what spooked markets. It's really the tier one capital wipeout. So about $17 billion at least worth of Credit Suisse bonds are being written down over their tier one capital. Now, what that means is that it could potentially have a contagion effect because there are banks all over the world that are holding that debt. It also kind of changes the rules a little bit, that shareholders, which are traditionally further down the pecking order when it comes to a default, are actually being protected while bondholders, especially tier one bondholders, are not and are seeing the write-down. So it's kind of changed the rules a little bit. It's created a lot of uncertainty in the banking sector, and it's one of the reasons that you're seeing the likes of HSBC this morning down 7.1%, Standard Chartered down 7.7%, as people try and assess what this means for global banking. And unfortunately, the deal that was, I suppose, the great hope to stem what we've seen over the last week in global banking, now unfortunately hasn't done what everyone is hoping for. And as you can see, financial shares and bank stocks all over the world are still under a significant amount of pressure.
Gary Booysen, let's leave it there. Thank you very much for your time. Rand Swiss, a portfolio manager there. All right.